If you're an entrepreneur and you have no freaking clue why you're getting crushed in taxes and you really want to save on taxes in your business, then this is for you. And you don't have to be a guru. You don't really have to have any idea what you're doing except for follow these steps and just dig into them a little bit more. First is you really want to establish a C Corp in Nevada. Nevada has a flat tax rate, okay? And so you want to have your C Corp living there. And that's kind of like the umbrella of this entity structure I'm going to just briefly talk to you about. I'm not going to get into the weeds with it, but just gonna kind of give you just a general idea of what you can do, and it's gonna save you so much on taxes. I've been doing this for a couple of years now, and it saved me over 50% on my taxes. So that way I can keep much more of the money that I worked very hard and am blessed to accrue. So C Corp, number one, that's gonna kind of be like your management company. And a C Corp allows you to do some other things that you can't do via something like an LLC entity, okay? Some other things that you can do out of that C Corp is something called MERP, okay? You can have a medical expense reimbursement plan. You can set this up so any of your employees, which will just be either yourself or maybe you and a partner, and could be a spouse or somebody else that you're set up under your C Corp. You can be the members of that business, and you can set up a medical expense reimbursement plan for yourself. Basically what that means is you and your spouse, or just you or whatever, you go out and you buy some supplements. You go out and you get a massage. You go out, you had to run to MedExpress or the hospital or something like that. You have some kind of medical expense. There's a big list of things, and a lot of things fall underneath that, right? What you can do, pay for that personally, and you can have your C Corp the next month reimburse you for that amount. So that's just something that my wife and I do. So we have massages that we get. If you have a gym membership, you can do that. Any supplements that you can get. So we add up all those things, we track them in a spreadsheet, we fill out a reimbursement form, we submit it to our C Corp, which is ourselves, and then we reimburse ourselves. And it's all on the up and up, it's all legal, and that's just what you're allowed to do because we went through the process of setting up this medical expense reimbursement plan through our C Corp for our employees, which is us, and now we can get reimbursed for those personal medical expenses. Okay, that's a big thing. And another thing that your C Corp can act as is a management company. So essentially what that means is, let's say you have an LLC. Your LLC has already existed for a long time, or maybe a short time or whatever, and you establish a C Corp in Nevada that I told you about because of the flat tax rate. You can set up a relationship between your LLC and your C Corp. So your LLC, you basically will set up an agreement, something called a management agreement. You need to have a record book where you keep all this stuff. Again, you have to have a paper trail because this is all legal stuff. It's all in the tax code everywhere, but you have to make sure you have your paper trail and you're tracking things so you can prove that what you're doing is, again, on the up and up. You want to have that management agreement between your C Corp and your LLC. All that's saying is like, hey, we're entering a relationship for this C Corp, let's call it Company A, to provide business management services to my LLC, Company B. Okay, it doesn't matter if you're a part owner or the owner in both of those, they can still have a relationship with one another because they're separate companies. It's okay if there's a shared owner, that doesn't matter. So you set up that agreement and you want to say like, hey, maybe just 20% of Company B, the LLC's revenue is gonna get billed by the management company, and you're going to pay that amount to the management company, right? So every month, Company A, the management company, is going to invoice Company B, the LLC company, for X amount, right? So maybe it's 20% of that monthly income or whatever it might be. Send the invoice over every month. You can send a wire. You can write a check from one business to the other, however you want to do it. Either one works. We typically send wires, is how we prefer to do it. We used to write checks, but wires are just easier. What that allows you to do is it allows you, especially if you have an LLC in maybe a higher tax state like Pennsylvania, for example, now that's allowing you to legally move money from your LLC to your C Corp where there's a lower tax rate. Really, really cool. Okay, so we have the management company that is allowing you to have some tax savings. You have MERP medical expense reimbursement plan that's allowing you to have tax savings. And then just the third thing I wanted to tell you about is something called the Augusta rule. This is all stuff, by the way, that I just learned about in the past year or two, but as all my other videos talk about, which please make sure you're watching them, you're sharing them, you're subscribing to my page, is I just took action, right? I learned what I could learn, and I took action. I learned from the people smarter than me. I did what they told me to do. I didn't wait. I have other people in my life that waited, and now they missed out on a lot of tax savings, right? So, but I took action right away, and now because of that, the past few years, I have saved tens of thousands of dollars in taxes because of these strategies, right? But anyways, the third thing I want to tell you about is the Augusta rule. This rule is crazy. It was just made up in Augusta, Georgia. One day, these rich dudes and gals were like, hey, like we gotta find a way to like write off our personal residence in some way, shape, or form. So they just came up with this new tax code, put it into action, and it's been around for a long time. And the really cool thing about the Augusta rule is it allows your C Corp, remember this is all based on the C Corp, you can only do these things through the C Corp entity. Can't be through an S Corp, can't be through an LLC, it has to be the C Corp. And you can rent your personal residence for up to 14 days a year for meetings, essentially, right? So most of the time it's recommended that you do 3 days per quarter, right? Four quarters in a year. So 3 times 4 is 12. You can have up to 14 days. So 2 of those months will have an extra day, which is 4, right? And so really cool thing is you can literally rent your personal residence. So if you have a big home, you just, you look at you hop on Airbnb and you look to rent a house of your size with however many bathrooms you have, whatever amenities you have, however many rooms you have, and you see what the going daily rate is to rent a residence like you have, and then you can literally charge your C Corp that amount. So your C Corp is like, hey, I want to rent your personal residence for 3 days this quarter for a corporate meeting. And you have to set up, again, paper trail, you have to make sure you have a lease agreement between you personally and the C Corp, the business, right? Saying, hey, we're renting this for 3 days, right? The C Corp is completing a lease agreement with you personally. So the company's saying like, hey, you, Susie and Bobby, I'm renting your personal residence. I want to rent it for 3 days at this going rate. You sign a lease agreement personally and the company. Maybe it's $500 a day if you have a bigger home. Maybe if you're in a really populated area, it's $1,000 a day, right? But what that allows you to do is have tax-free income to yourselves personally, because the C Corp takes money out of your business bank account and it pays you personally for those days that it's renting your residence for a corporate meeting, and that money is tax-free. Same with MERP. Hope I mentioned that money's tax-free. Okay, so a lot of really cool things that you can do through a C Corp. So I highly recommend that you get that established in Nevada and you implement it as a management company for any other businesses that you own, MERP and Augusta rule. I hope this is helpful. Go out there, keep more of that money that you work so hard to earn. Take care and God bless.